Hey everyone, welcome back to Upside Down Data. Today I want to talk about something a bit different. I want to talk about Bitcoin's stock to flow model and whether or not a small change in the interpretation of this model might give a different lens to think about its validity. So this is a model you've probably seen before if you've been in the crypto space for a while. It's one that was looked at very heavily in 2021 and was the basis for a lot of people claiming that Bitcoin was going to go on to 100K plus, in late 2021, early 2022. If you're not familiar with this model, it was one that was put forward by Plan B back in early 2019. And really what the model is looking at, what's based on, is this idea of looking at the relationship between the amount of Bitcoin that exists and the new production of Bitcoin. So that's what stock to flow is getting at, the idea of total supply relative to new supply that's hitting the market. So there's more that goes into it in terms of actually fitting it, but basically the end product you get is something that looks like this. And it's very similar to the fit that was the original fit that Plan B put forward back in early 2019, which is why I've chosen to do it this way. And so essentially with this model, the way it works is that you'll notice that these big jumps have to happen right at the halving. And that makes sense because the flow of Bitcoin, the amount of new Bitcoin entering the market, gets cut in half basically every single time there's a halving. The block reward gets cut in half. Therefore, the flow of new Bitcoin into the market gets cut in half as well. So that's why you see these big jumps here. And then what people were looking at in 2021, the reason why they thought that Bitcoin was going to go off to 100K plus, is that in previous market cycles, like here and like here, what would tend to happen is you get the halving that would shoot up this kind of the value on the stock to flow model. And then soon after, price would come up and it would meet that level. It would kind of catch up to that level, get up there, and then go into this bubble. It would kind of get above that level for a while before ultimately then coming back down in the bear market. So a lot of people thought was, look, same thing happened again here in early 2021. We got up to that level. Now what should happen next is that we go up, go into that bubble phase again before coming back down in a bear market, waiting for the next halving to do the same thing over again. And so far so good is what happened in early 2021. So in the original fit of the stock to flow model, the kind of average price that was predicted for this whole market cycle back over here was about 55K. That was roughly around the value. And so that's what my fit, I also, aim to have something similar. And that's what it is here. It's at about 55K at this time as well. This is basically the same thing that the original model was predicting. I'm using daily data here. The original model was fit to monthly data, but the end result here is very similar. This green line here, the stock to flow that I fit here, very similar to the original fit. And so what you notice though is that what happened is that we didn't get that. Obviously, if you've been in the crypto space, we did not get that push up to kind of into this bubble phase like we have in previous market cycles. Instead, we really fell off and now dipped well below this value predicted by the stock to flow model in a way that never really happened before. We never really got this massive deviation before. And so what this really led a lot of people to say was that the stock to flow model is wrong. Stock to flow model is, and some people went further than that, say not only is it wrong, but it's statistically invalid, et cetera, et cetera. A lot of people really just dismissing it and saying it's broken, nothing to look at here anymore. Let's abandon it, move on to other things. And so that's, fine. I mean, certainly when we look at it, you can see that, yeah, sure, price has not been doing what it has done in the past in relation to the stock to flow prediction. Therefore, something is different is happening this time around. What I want to talk about in this video is whether or not there might have been a hidden assumption underlying the original fit of the stock to flow model, that if we take that into account and kind of correct for that, things might actually look quite a bit different. And it has to do a lot with the total crypto market cap and the fact that Bitcoin is not as dominant a player in the total crypto space as it used to be back here. So let's get into this. Let's get into what I'm talking about. You'll see what I mean here as we go through the argumentation. And so this is going to start off with just a conversation about market cap and the relation between Bitcoin's market cap and the total crypto market cap. So this is Bitcoin's market cap I'm showing you right here. We got up to a bit over $1 trillion. It was around 1.3 trillion was the top in 2021 for the Bitcoin market cap. And what will be important to know for the future, what we're going to talk about in a minute, is market cap is the price of an asset multiplied by its circulating supply, by its supply. And so for Bitcoin, basically what we're doing is we're taking the circulating supply of Bitcoin, multiplying that by its price, and that gives us its market cap. It's going to be important to note in a second. So let's compare Bitcoin's market cap with the total crypto market cap. So that's the red. The total crypto market cap is in red here. And then the white is still just Bitcoin's total market cap. And what you'll notice is that obviously they diverge. And basically in the early days, Bitcoin was by and large the entire crypto market. If you look at Bitcoin dominance for the early part, Bitcoin was basically 100%. There really weren't any other shows in town, or at least ones that really had any capture of the crypto market cap. Then really once we got into this market cycle here, 2015 going into ultimately the 2017, 2018 top, that's where you start seeing things diverge. Bitcoin was no longer the only game in town at that point. And then really ever since that point, that has remained. You'll notice this difference where Bitcoin is now no longer accounting for all of the total crypto market cap. And that's not any surprise. You know, we have Litecoin, XRP, some of those earlier ones. Then you had Ethereum get into the game, and then all the other altcoins that, you know, kind of rotate in and out. But certainly there's a lot more competition in the crypto space than there used to be back here. Bitcoin's not the only game in town. It's not the only place that has a persistent market cap. Other assets, Ethereum, etc., are now taking up a bigger space. And we can see this if we just look at the Bitcoin dominance chart. That's what I'm showing you here. This is the percentage of the total crypto market cap that is being accounted for by Bitcoin. And what you'll see is that early days, you know, it was basically 100%, but then it really kind of, in that 2017 run, really fell down into below 40. And then since then, it's kind of been ranging. And, you know, more recently, it's been kind of stuck between, you know, roughly 50 and down around 40. And that's still where we are today. But again, that's why this divergence has happened, is that other assets have entered the space. Bitcoin is not the only game in town. But, and here's where we're going to connect things back to the stock to flow model. Let's imagine a counterfactual, an alternative reality where this didn't happen. Bitcoin losing its market share to other assets, or not necessarily losing market share, but basically other assets coming in and taking up market share. Let's imagine that didn't happen. Let's imagine that Bitcoin stayed at basically 100% of the crypto market. Let's imagine that no other crypto projects managed to gain a foothold. They never gained any level of traction. Bitcoin was the entirety of crypto. And then let's imagine that Bitcoin went ahead and that the total market cap ended up being the same as what it ended up being here. You know, we got up to around 3 trillion. That was around the top up here, but it was all Bitcoin this time. It was not being spread out amongst Bitcoin and other assets. What would Bitcoin's price have been had it accounted for the total crypto market cap in, you know, everything since that point? And that's what I'm showing you here. So here what we're doing is we're basically saying, let's assume that Bitcoin accounted for the entirety of the crypto market cap. So throughout this whole time, let's imagine that Bitcoin dominance was actually 100%. It was accounting for everything. Where would Bitcoin's price have been had it done that? So again, market cap is just price times circulating supply. We know Bitcoin's circulating supply, so we can then derive what its price would have been had it accounted for the total crypto market cap. And that's what I'm showing you here. And what you'll notice is at the top of the market in 2021, had this happened, had Bitcoin accounted for the total crypto market cap, its price would have gotten up to around 150K at the top here in late 2021. And that's interesting because, again, that's what people were predicting based on the stock to flow model. And so if we go ahead and overlay the stock to flow model predictions on, oh, I should just show before I get here, this is just showing the dominance price versus the actual price, just to show that they are different. But here, let's overlay the stock to flow predictions on this, what I'm calling the total dominance price, if Bitcoin had accounted for the total crypto market cap. And what you'll notice is that things look pretty good when we do this, right? If you look through this cycle here, we don't get as big of a bubble, maybe, as we did back here. We get a similar kind of behavior. We kind of get this bubble, we're above the green line, then in the bear market, where we've been, come back down to it like we did here, like we did here. Now, this is a bit, I think this is interesting. This is an interesting change in perspective. And really what I think the hidden assumption that the stock to flow model might have gotten wrong, but that when we kind of change our perspective, maybe we can kind of correct for, is that maybe the stock to flow model was kind of secretly assuming that Bitcoin would remain basically the entirety of the crypto market cap, Because certainly in all the data it was fit to up through this point, with the exception of this run here, for the most part, Bitcoin was the main game in town. For the vast majority of kind of the trading data back through around here, it was 100% of the total market cap. And so maybe that was kind of a hidden assumption being baked into the fit, would be suggesting that Bitcoin, basically there was an assumption built in the model that Bitcoin would be basically 100% of the crypto market cap. And so if that assumption had ended up being true, and that's what we're kind of playing with in this fake world that we've built in, where Bitcoin was the entirety of the crypto market cap, had that been the case, the model actually would still be doing quite well. If Bitcoin actually was 100% of the crypto market cap, it'd be doing pretty darn well here. And we can see that it would be doing much better than the original fit. So this is the original fit, everything falling away. Here it is on kind of this hypothetical fit. If Bitcoin had been accounting for the total crypto market cap, things would be doing quite well. And so maybe a change of interpretation that we could have is that instead of stock to flow model being a good predictor of Bitcoin's price, maybe it's a better predictor of the total crypto market cap. And that's what I'm showing you here. I've adjusted the stock to flow prediction, so instead of it being a price value, it's just a market cap prediction. And the red here is the total crypto market cap. And this is basically the same chart I was showing you here with this total dominance price here. It looks pretty good. It looks pretty decent. Now, that then leads us into the question, does this mean that the stock to flow model is still valid, or is the model still wrong and should be ignored? And that's where I think there's arguments that can be made on both sides that are reasonable. So obviously the argument against is saying, no, stock to flow is still invalid. This doesn't really change anything. This doesn't really matter. Is that, why should the total crypto market cap be so dependent on Bitcoin dynamics, right? Bitcoin's not the only game in town now. It's less than 50% of the total market cap. And all the other chains have totally different tokenomics. They're not beholden to what Bitcoin is doing in really any way. Price is obviously correlated, but in terms of the actual inner workings of those protocols, they're not directly tied to Bitcoin in any way. So why should this be predictive? I think that's reasonable, right? That there's no causal link between what, kind of at a functional level, on the protocol level, those other protocols are doing and what Bitcoin's doing. So that where you could just say, maybe this is just convenient correlation, but it's not anything to do with causation. It's not meaningful. There's no meaningful prediction here. There's no signal. Possible. That's one argument that could certainly be made. But you could also make an argument on the other side, I think, where you could argue that even though Bitcoin isn't directly having any causal influence on those other assets, certainly it's having a correlation with their price. And I think you could probably make some argument that Bitcoin has, at least so far, been a big driver of other asset prices. Probably so far, Bitcoin has tended to be the asset that leads the way in bull markets and then leads the way in bear markets. It's a known kind of secret in crypto that Bitcoin tends to run early, then profits from crypto tend to rotate into altcoins, and then then Bitcoin tends to enter into kind of the bear market relatively early, while kind of some mania is still happening in altcoins, and that eventually dies off, and then they crash as well. And so from that perspective, maybe what you could argue is that dynamics within Bitcoin are really important. What happens to Bitcoin's price is really important. And that, the halving so far has oftentimes kind of signaled the beginning of big bull markets. And so even though Bitcoin's price might not kind of end up being able to hold up to what the stock to flow model was predicting originally, maybe the excitement that comes in with Bitcoin rallying and then the profits it takes into altcoins and all the excitement that happens there that gets a bunch of people to FOMO into crypto from outside leads to a relatively predictable amount of money flowing into crypto. And maybe it's that relatively predictable amount of new money flowing into it that really elevates total market cap that's still being captured by the stock to flow model. So it's not necessarily causal in that direct sense of it being this kind of protocol thing leading to the direct protocol price, but maybe just something that's more about the crypto market's dynamics, where it's cyclical, leads in these big bull markets, and just happens to be that the amount of money that flows into crypto is relatively predictable across time and is somewhat captured by this model. And so it's a bit of a weaker link, but maybe something that is still relatively meaningful, or at least have predictive validity, if not causally related. Because that happens all the time. There are things that predict things that don't have any direct causal influence on them, but they go together. They have a correlation that can happen. And so you might argue that it's meaningless because it's not directly causal, or you could say, well, who cares? If it's predictive, that's useful. So I'm not going to make, stamp my flag one way or the other. I think that's up to people to make their own decisions of where they think with this kind of exercise that I've gone through here, what they think makes the most sense and whether or not things will continue. And I'm certainly not going to sit here and argue and say, oh yeah, definitely the stock to flow is going to continue to predict total crypto market cap from here. But I do just think it's an interesting thing to consider, to discuss. I think it's an interesting debate to have of, is this a useful analysis to think of stock to flow as actually being something that better captures total crypto market cap than just Bitcoin price or Bitcoin market cap or something like that? And then if that's, if this is a useful analysis, then think, okay, is this something we think might continue into the future or not? Is this just kind of a coincidence that's going to just, fail again? Just like, how applying it directly to Bitcoin's price seems to have not worked out so well. Or might this be something that actually could work out in the future? I think it'll be interesting to watch it. So again, I'm not making any strong statements. I'm not going to be standing here and say, oh, this is it, stock to flow is back on, everything's going to work out beautifully. But certainly when you look at this, it looks a heck of a lot better than it does when you just apply it to price. And so I think it might be a useful debate to be had. So I'd be curious to hear your thoughts, critics of stock to flow, what their perspective is, if they think this is just a big waste of time, or if this, seems interesting. And then proponents of stock to flow, what they would think about this if they think this is an interesting analysis as well. All right, so I'll leave it there. So hope you found this video useful. Also, make sure to go and follow us over on Twitter. We put a lot of updates about our models. We have a bunch of different models that we have at the channel. And also check out our website, polaritydigital.io. Link is in the description. We have a bunch of our own models that are there, not the stock to flow model, but our own models that we've built and we talk about a lot here on the channel as well.